Well, welcome back. If you just joined us, you're watching KTN Prime, and right now we are moving on to our discussion tonight, where we're talking about the government formally kicking off the process to privatize the Kenya Pipeline Company, that's KPC, through an initial public offering at the Nairobi Securities Exchange. This marks one of Kenya's significant, or rather most significant, state divestiture in recent years, and this is according to many analysts and what they've been giving as feedback on this particular decision by the government. And just to mention, in the studio today, I have two gentlemen to help us make sense of this sale and why it matters and why there's opposition against this sale. We have Caleb Mugendi, who is at my far right, who is a portfolio manager at Capital A Investment Bank. Thank you, Caleb, for making time.
Thank you for having me.
And we also have Biko Wafulo, who is just here next to me, and he's an investment research analyst. Thank you, Biko, for making time.
My pleasure. Thank you for hosting us.
We have seen a lot of developments today. We've heard about the Safaricom sale. We've seen still developments around the KPC, reflections coming from different quarters. And just before we go further into the discussion, Caleb and Biko, I just want us to look at some of the numbers to make at least to give us some context on what we're discussing tonight. So when we look at some of the graphics there that we have prepared for you tonight, looking at the shares allocated, the Kenya Pipeline Company shares allocation consisting of 11.8 billion shares, and the shares allocated across 5 investor pools, by the way. That's 20% for Kenyan retail investors. And we also have 20% for Kenyan institutional investors and 20% for foreign investors. Again, also we have investors there touching on the East African community investors, which has been accorded 20%. And of course, also oil marketing companies, that's OMCs, 15%. And KPC employees, in addition, by the way, to the direct IPO allocation, KPC has constituted an employee share option plan, that's an ESOP trust, to hold up to 1.5% of the company's authorized share capital post-listing. But in this case, talking about 5%, KPC employees will be able to consider buying. And of course, this not just being what we're looking at tonight, also to make sense of the discussion, is to understand that the Kenya Pipeline Company IPO consists of 11.8 billion shares on offer. That's 65% of government stake on sale. And of course, a cost per share of these particular shares is Kenya shillings 9 Kenya shillings, and an IPO in this case is to help raise, for the government to raise 106 billion Kenya shillings. The minimum investment, by the way, for these shares is 100 shares. Gentlemen, developments that have taken place in the country, there's been a great opposition last year, this year, some legal battles in court opposing this particular sale. But here we hear the government saying, hey, these assets are not supposed to stay within government control. It will be better to privatize KPC, because this will help at least the government to collect some money for other things that can be used, the money can be channeled into in the country. But I just want to hear from you, Caleb, as we begin, your thoughts on the sale of this 65% stake of the government.
Thank you, Leah, for having me again on the show. I'd just like to start the discussion by saying I want to commend the government for proceeding with this sale of KPC. From being a state-owned enterprise to being a public company through this process of the initial public offer to become a public company. KPC is a very strategic asset for Kenya. It's a company that has been formed in the 1970s. It's a well-run business. It's a profitable business, and it plays quite a key and integral role in the petroleum value chain, being the main midstream operator in the country, being able to distribute petroleum both locally and also to the region. So I'll say, in terms of Kenya Pipeline Company being a strategic asset, being a well-run business, and now allowing the public to participate in the ownership of this company, I will commend the government for that. It does serve two benefits also. The government will be able to raise revenue, and also public participation in the IPO the public will also be able to become investors in the IPO.
All right, Biko, your thoughts on this sale?
First, thank you for having me. I would like to take a different view. You've talked about the challenges and the opposition that the government has faced in terms of trying to list the IPO. And I think for me, first and foremost, the IPO is long overdue. The country is eager and hungry for more IPOs. I mean, I look back and I see how many of us made money from buying Safaricom shares and Kenyan. So there's hunger in the market for Kenyans to invest. A lot of Kenyans are losing a lot of money into unregulated investment options. So this is a good opportunity for Kenyans with money to be able to invest. And I think the government needs to do more. So the biggest issue why there's been a lot of challenge to the government is that the government lacks the element of trust. No one trusts the government. Whether it's Safaricom, whether it's KPC, whether it's anything else, there is no trust. So we're raising this money to offload the strain of being able to manage our affairs. But how is the money being used? So the biggest challenge and why there are a lot of court cases is because the government needs to work on how can it create an environment whereby we as citizens and investors can be able to trust it. So that's the biggest challenge. Number two, KPC is a very strategic asset in the country. We all know what's been happening around the oil aspect across the globe. We see what Dangote has done in Nigeria in terms of, I think, building one of the biggest processing crude oil institutions in Africa. So for us, for the government of Kenya to list KPC, it's an interesting opportunity for investors and for citizens of the country. But a lot needs to be done by the government. One, in terms of being very transparent in the process, transparent in how, if you look at the pools, how local investors are going to actually be allocated the shares, the implication of having foreigners and East African citizens being able to buy into the IPO, because given its strategic aspect. But the biggest question is how the company is going to have long-term value for shareholders. I mean, when you look at how it makes money from regulated tariff returns. This means they make money from, given how much volume in terms of oil and petroleum products they're able to push across the country and the region. And so one of the things that I'm looking forward to hearing from the Ministry of Treasury and KPC officials is how the company is going to offer value to shareholders going forward, how they're going to increase the market share in terms of how much volume in terms of petroleum products are going to do. But most important, and the one thing I want to underline most, is the element of trust. Will I, as a local investor, with my 10,000 shillings, be able to benefit if I buy into this particular IPO? If you look at the valuation, if you look at its peers in the market, there have been questions around it. It's been valued at times 22. If you're able to compare it with other peers, Kenya Power or KenGen or Total, they're trading below book value. They've been valued less. They're trading below. And so the government needs to come out very clearly and address these questions. I think the lack of preparedness by the government to be able to address every single question raised by other government officials or politicians or Kenyan citizens, especially online, is a very big problem. Number two, the need for public participation. Our constitution is very clear on how we are able to do certain things in this country. So I think the government needs to know that they can be able to achieve more if they're open, if they can be able to achieve more, if they're able to talk to us citizens in a manner that is not condensing and in a manner that actually makes us believe what they're saying.
You've mentioned something critical, and I was actually coming there. The issue of public participation. And it's really clear because the kind of relationship that citizens are having with the current administration, there's a lot of lack of trust. But yet there's also been questions about public participation in this particular decision. Caleb, do you think there was adequate public participation where Kenyans' voice can be heard on whether the sale should go through? The stakeholders will also have a bearing on making this decision. What do you make of the public participation?
I would say the public participation could have been improved, could have been bettered, that process. In the process of an IPO, also in terms of how you set the price that you want to offer your shares to the public, there could have been more participation, especially from possibly institutional investors who could now come in and see in terms of the price discovery if this 9 shillings does make sense or if it does not. Usually we say for a company that's coming initially to the public in an IPO, there should be a short-term discount to its fair value. And as I was going through the information memorandum from these documents that have been shared by the transaction agents and the leading transaction advisors, I was very keen on seeing where this price came from, the 9 shillings. And from my opinion, I do not think it was explained quite, it did not come out quite well. I was expected to see a valuation report or how they came up with this price discovery of 9 shillings, which they did have some multiples. We talk about the enterprise value to the EV to EBITDA, the enterprise value to the EBITDA, which is the earnings before interest, tax, depreciation, amortization, of around 8.1 times. So I was not convinced whether this is a high price or this is a low price. So then it's up to us as investors and fund managers, portfolio managers, or even the investing public to now do our own analysis. We have to now come and do our own analysis to figure out whether this 9 shillings per share is attractive. Is it giving us a good discount? Is it am I going to invest for long-term value creation, and the like? Though I do want to highlight that the company has been paying dividends consistently, and they did also say that they'll amend their dividend policy to be able to pay out 50% of the earnings of once it's listed. So at least we have one expectation of returns from the dividend.
I just want us to listen to what the CS for Treasury, John Mbadi, had to say yesterday about this particular development on the sale of the government's 65% stake of the Kenya Pipeline Company. Of course, just to bring context further into what we're discussing, because as you say, Biko mentions issues of trust. I hear you, Caleb, talking about there's a few issues there. There's no clarity on how the 9 shillings was arrived at. Numbers are not making sense. So what does that mean? But let's just listen in on what the CS had to say yesterday.
It is with great pleasure that I present to you this information memorandum for the offer for sale of 11,812,644,350 ordinary shares of Kenya Pipeline Company.
So the price of the shares is 9 shillings per share, and the minimum investment amount of shares is 100 shares. We've made it open and available for everybody. That means if you have 900 shillings, you can apply for the KPC shares through this IPO.
And even as we listen to that, and we've mentioned the issue of public participation, there's also the issue of constitutional compliance. That has been a big question for those who have been opposing this sale. And before we just go further into this discussion, let's take a short break. When we return, we'll be looking at this particular issue. Well, I'm told by my director that we'll just be moving on. Caleb, I know you've mentioned the question of how the government or the 9 shillings was arrived at, and you say there's the question of numbers not tallying, they don't add up. But what are your thoughts about this 9 shillings? Does it make sense? Does it make business sense for those who will be investing?
Well, I would say in terms of there's no short-term re-rating advantage. From our in-house research, we've come up with a valuation price of around 10.5, which is close to 15% upside from the current price. So looking at it from that element, previous IPOs or IPOs in general often offer a discount to a fair value of close to 15 to 20% initially. But again, this is also informed by the demand. At the end of the day, it's demand and supply mechanisms that do drive price discovery. So it could be that your institutional investors or the oil marketing companies or the local institutions had a lot of demand for this particular offering, KPC, thus informing the higher price than that 15 to 20% discount. Again, I also want to say that looking at KPC as a business, is something that we like to look at in terms of, does this company have a sufficiently strong enough moat surrounding it, its business processes, to justify investing in such an opportunity? So you look at KPC, look at the revenues, its revenues, look at how it makes its money. Yes, it's a volume business. It's in the business of transporting petroleum products across the country and also regionally. Does this industry, what is the competitive advantage of KPC in this particular industry? Are you able to forecast volumes or value, revenue, earnings, let's say 5-10 years out from today? And are these revenues under significant challenge, possibly from new entrants into the market, possibly from regime change or regulation change, and the like? And owing to such the nature of its business, we can see that KPC actually does have a lot of things that are going for it in terms of the long-term viability of its revenue streams. It basically behaves like a utility company. It's not subject to your business cycles, your ups and your downs in a normal business cycle, and that is quite a good competitive advantage. You don't have, given it's a very capital-intensive industry, you don't have competitors coming in to grab part of your cake immediately. The barriers to entry are quite high, and also because of the strategic importance of the company, it's almost like you also have a policy support backdrop to it, thus maintaining your tariffs, maintaining your margin going forward. So it's more a predictable business that you can value long term, and if you're looking for a company or business that can generate for you income growth over the long term that's predictable, it's a good bet.
All right, Biko, when you look at some of the concerns that have been coming from those opposed to this particular sale, one of the things that has been mentioned prominently is the sale is intended to help the Treasury manage fiscal deficits with plans to finalize the process by early 2026. Yeah, those were some of the things that were coming to the fore. But just to help us understand, when we're talking about these fiscal deficits, what are we talking about?
I think it's important for Kenyans to understand that the reason why the government has decided to sell strategic assets through the process of the IPO in the stock market is basically to be able to ease pressure on how the government is able to manage its own resources in terms of are they going to borrow from the local market, are they going to go to international market, and what are the rates? And if you look at our loan ratio to our gross domestic product, things are not looking very well. If you look at cash flow in the system, things are not looking very well. If you look at key indicators that define how market is doing, PMI, if you look at inflation, things are not good. So if you look at what government is doing in Safaricom and KPC, the point is basically can they raise some money, strategic funds, so that they can be able to cover certain deficit flows in terms of financial aspect in government operations, as it eases off pressure for them to be able to pay off certain key debts. Because I know this year, towards June, certain key debts are going to be paid. But the biggest question that's actually coming out from analysts and local investors is, if government is selling 65% of KPC so that they can be able to offset certain financial obligations, how much of that money that is going to be raised through the IPO will go back to KPC so that it can be able to be improved to add more value to shareholders? If I'm able to look at the numbers, for example, if you look at price to earnings, it's been put at 22 times. If you look at price to book, it's 1.6. If you look at return on equity, it's been at 7.6. If you look at dividend yield, it's been 3.9. So he talked about the company being able to do dividend yield consistently. And I think the bit he forgot to mention is, until today, the government has been the only shareholder. So all the money that the KPC has been making in terms of profit goes to government. But now that 60% of it is going to be sold to the public and other select investors, how its money is going to be used is going to be very critical. And it's good for us as a people of Kenya, because now there'll be more accountability, there'll be more transparency on how certain agencies of government are managed. And this is the question why some of us are supporting such an IPO, so that all government agencies that can be listed to be listed, so that they can be managed efficiently, and whatever money that can be used can be rechanneled back into research and development, so that we can be able to go far ahead. So I'm hoping, one of the key issues is that I'm hoping that some of the money that will be raised from the IPO will go back into research and development. I'm also hoping that the Kenyan government is going to agree with our East African partners on how we can be able to extend our pipeline all the way to DRC, because this is the only way there's going to be more value for shareholders. If you look at the peer comparison, for example, KPC is trading at the highest price to earnings. KPLC has 1.2. Kengen has 6 times. Total Energies has 11. So you see the pricing of KPC is very high. And this is why the Ministry of Treasury and officials from KPC need to take time and explain every single number. So you're selling 65% of the company, fine. You want to raise 106 billion. You're listing 11.8 billion shares. What does this mean to the people of Kenya who are going to invest in this? So until those involved are able to come out to the public to explain clearly, there's going to be a lot of back and forth. Because, I mean, KPC operates under the energy sector. And if you look at the peers, it's really priced high. Kenya Power has a market cap of 22 billion. KPC has been estimated value at 154 billion. So there's a lot of questions. And also remember, it's a monopoly. So we go back to the basic tenets of, when you're doing an IPO, transparency. Number 2, honesty and accountability by the government. We've seen how the government has been using public resources. We've seen, a lot of us have been saying we need our debt audited. So if this part of this money is being raised to pay off certain debts and to enable government to be able to do certain things, it is important for them to tell us, out of the 1.8 billion that is going to be raised, how much money will go where and how much money will go back to the company to enable it to do more research and development, so that it can be able to add more value. Because we do not want to have a situation whereby a year down the road, the share is trading at 2 shillings, for example. There's no dividend for the next 10 years. And Kenyans took loans and borrowed money to be able to participate. There's been a huge hunger for investment. Every year, Kenyans lose almost 800 billion to scammers, to unregulated investment options. So such an opportunity presents a unique opportunity for all of us to invest our money in a manner that the duty of care and the duty of trust is upon the government to ensure that if I put in my 5,000 shillings, it's going to come back something.
That brings us to a question. It's very critical for us to answer this question, Caleb. Is there a risk factor for Kenyans and any investor who would like to invest in these shares?
Yes, of course, every investment does carry some degree of risk. I'll say in terms of some of the numbers that Biko has said, in terms of the price to earnings at 22 times, you see the market is at 7.5. So there's a huge earnings premium that has been assigned to KPC when it's coming to the market. If you also look at let's say the forward earnings, 1 year forward is at 17 times. You also look at the price to earnings growth metric. So you're basically trying to see if this price to earnings is justified based on the growth rate of the company. So I was looking at some of the forecasts that were in the information memorandum. 5-year growth rates at around close to 18%. So with the current price to earnings of 22, you still get a price to earnings growth rate of around 1.2. Ideally, this metric should be below 1 to signify that a company is cheap on either on a price to earnings or on a growth rate basis. However, looking also again at KPC, its business is quite capital intensive. It has a lot of fixed assets that are long lived, so they do suffer a lot in terms of the depreciation expense that they have to charge every year to their income statement. So another metric that you could look at is a free cash flow yield, which looks at the free cash flow that the company is generating year on year to its valuation. So you can look at the free cash flow of KPC, what is the company actually generating in terms of cash, to this supposed or this valuation, I think is 160 billion.
Yes.
And they have free cash flow of, I think it was below 20 billion. So you're basically getting a free cash flow of around 7-8% free cash flow yield, which I would say is just in the middle of similar companies. You'll prefer a free cash flow yield of above 10%, meaning that your cash flow, you have a sufficient cash flow to continuously reinvest. So in terms of the pricing point, I think the pricing point could have, we could have gotten a bit better, a bit more incentive because we're looking at these numbers and the price does look a bit rich. I think 20 price to earnings is your 20% growth companies, your technology companies, your AI companies. Those are the companies that usually are in your 20 times multiple range.
All right. And if we look at just one of the things that the activists within the country have been opposing, and one of the key issues that they cited is national security risk, and of course not forgetting the allegations that the sale is driven by IMF pressure to pay debts. Biko, your thoughts on this?
I think the one thing that is important is that, yes, a lot of government agencies have been run down. I don't think, other than KPC and there's something you said about KPC having a lot of property and the business model being capital intensive. They have a lot of real estate where they put their pipeline and things like that. So the biggest thing that we need to understand is, yes, this is the right way for government to handle a couple of its critical agencies, list them on the stock market, avail the opportunity for Kenyans who have disposable income to be able to invest. And that will come up with two issues. One, there'll be transparency. Two, there'll be proper governance and management of these particular assets. And these critical assets will be managed better, because if you're listening to the stock market, then there's a standard benchmark of how you need to be able to manage your business. So looking forward and looking at what KPC stands, it's going to create an environment for more government agencies to be listed on the stock market so they can be run properly. However, the element of risk and the element of a lot of fights, and the reason why I think the government seems to be haphazardly in terms of putting everything together and not having enough time to educate the public what this means, because Kenya is a very connected market, and we have data. All I need to do is just go online and compare the numbers from Kenya Power or KenGen or Total, for example. So it's a huge moment for the government to be transparent, to be accountable. And if you look at KPC's business model, it's capital intensive. So how much percentage of the 108 billion that's being raised will go back to the business to help them, upgrade their systems, for example, help them upgrade their pipeline, help them do more research and development to be able to have value for me as a shareholder 2 years down the road. But most important thing is, I think the government this week has an opportunity to critically explain to Kenyans all the issues, and also try and talk to the activists who have gone to court, because our constitution is very elaborate and it's very powerful. And if you look at how the last 3 years have been, a lot of government policies have been challenged in court, and those people have won. So we have a lot of things that have actually stalled. And it's because the government has this hubris kind of behavior whereby they do not want to explain anything to anyone. They think they're here, and us, we are citizen people, we don't deserve to be told the truth. But the constitution actually gives us that opportunity. So I'm hoping that this IPO can actually proceed on well. I'm hoping that the Ministry of Treasury and KPC officials can be able to come up and explain all these numbers. I'm looking at certain numbers, and I have a lot of questions, and I'm hoping that especially the CS for finance, Treasury, can calm down and just come and explain to us.
What are some of the numbers that have you concerned, Biko?
So let's look at if you're looking at peer comparison, Kenya Power has the highest price after earnings listed. KPLC is 1.2. Kengen is 6 times. Total has 11.3. And if you look at the business models, they're able to push volumes. Those volumes make them make profit. Then that profit, when you remove overheads and statutory obligations, that money can go to dividends for their shareholders. What about KPC? How are they going to make sure that they're able to increase the volumes they're doing? How sure are we that the 6 billion they made last year as profit will be doubled? You know, if I'm looking at Safaricom, if you compare KPC and Safaricom, the reason why there's a lot of fight for Safaricom is Kenyans could have gotten a more better deal in terms of how much we're selling for Safaricom. For KPC, it's a unique opportunity for the government to see how best they can be able to do to list government agencies. And I'm hoping, I mean, as a research analyst, I'm thinking the government should have started with a sugar factory, for example, in Nzoia. Will have been a perfect example on how and how Kenyans can be able to come and explain. The other critical number is the relative market capitalization. The implied market size for KPC is at 154. If you look at Kenya Power, it's at 29. If you look at KPC PAT, it's at 24. So it's really, I mean, the numbers are really positive. But the question is, once we hit the trading day, when the bell has done, the share is trading, will KPC rise up to the occasion of how it's been built, of how it's been touted to be a very good
So we're talking
IPO.
more about transparency.
Transparency is very
for
important.
Securing...
Accountability is very important. But the most important aspect is what value will KPC give me as a shareholder if I buy my shares worth 5,000 going forward?
All right. And when we talk about the IPO, Caleb, just to also understand, how does this work? The initial public offering, the investors who may want to, take part of their earnings into these shares, how does it work if I want to invest in this particular IPO?
Well, there's a timeline that since the announcement, which I think was on 19th, yesterday. Yeah, it was yesterday, right?
Yes.
It was yesterday. So there's a 1 month selling period. So this is where either you can ask, it's basically like a roadshow, you can ask the officials, KPC officials, to send you any documents that you want, if you want to go further from the information memorandum. This is the time where the brokers and the transaction advisors go to the investors, go to their fund managers, and try to also get them interested and get the demand for this IPO. So it's a period of 1 month. I'll say the 1 month is maybe strategic in a way, because again, the ask is quite significant. You see, they want to sell 106 billion, the stake worth 106 billion. In this IPO. So book building, unless they had already done the book building before, book building, if you're starting from zero, yesterday if you're starting from zero, then to get to 106 billion, it needs a bit of time. Yes, it has been divided into a number of categories. So like your brokerages can reach out to retail investors, the all marketing companies, of course, and institutional investors, of course, the transaction and lead arrangers will reach out to them. Then after the 1 month period is over, they'll be able to either tally, look at the results, allocate. If let's say one category has more demand than another, I think there's a mechanism which they'll be able to allocate to another category and just be able to see how much bids have been or how much interest has been generated for this IPO. I think then, is it on 4th or so, then the results will be announced, like around two weeks or so since the close, then results are announced, and then you are given like a day or two to be able to fund your brokerage accounts to be able to pay, and then you allotted those shares. If you're successful, you allotted the shares by I think on 6 or so, and then trading begins the next week on Monday. I think they did say on 9th of March.
Yeah.
So that's
just to add on what he said. As I said earlier, Kenyans lose almost 800 billion a year to scammers. So this shows that there's an appetite for Kenyans to invest. We're all trying to see where we can be able to put our little money we earn, we can make profit. We know how things have been hard, and so this presents a unique opportunity It's a regulated investment option, and that's why a lot of transparency is needed. If you look at what's been happening in the country, the element of where can I put my money for investment? I can either go to the stock market and invest in companies that are already there. So this is a unique opportunity for even the Nairobi Stock Exchange itself and capital markets to come out and do roadshows and tell the people that instead of putting your money into scamming investment options, come to the stock market. If you have a family business and you're trying to raise capital and your bank cannot either come through for you, come to the market. List your SME on the secondary market and be able to raise the money you need to do. So for me, I would like to challenge the government in this way, that this is a unique opportunity that other key stakeholders, Capital Markets Authority, the NEC, can be able to take advantage, do roadshows. I mean, as he's put it, the time frame is actually very compressed to be able to raise that money. It will need time. And then, there's the element of verification to know how many retail investors got what, institutional investors got what, and make sure that if there was an oversubscription, there's enough time for people to be returned their money before the trading begins. Because Safaricom had drama before it went to lead to trading. So for me, I think it's a unique opportunity that Kenyans can be able to invest. It's a unique opportunity for stations like yours to be able to educate the people on what are the available investment options and what are the risks affiliated to each investment option and what's the way forward. And if this government is keen on helping Kenyans make money, on helping Kenyans have some money in the pocket, they will do everything to ensure that they're doing roadshows across the country, to make sure that we understand what it means to list on the IPO. It makes me understand that if I borrowed 10,000 shillings from you to buy, and once in March, once the trading starts, I'm able to make some money. So this is the time they need to. So this is a process that should not be rushed through. Yeah, I'm expecting to see a roadshow in Webuye, in Mombasa, in Mandera, in Nyeri, so that people can be able to understand. I mean, 109 billion is not small money. It's heavy, and the valuation is huge for KPC. So the element of being able to do structural, accountable, and transparent process is actually going to determine how this particular IPO trades on day one when the bell is rung.
Because I would like to hear from you, your view. I know I've asked Caleb just to hear also to pick his mind on the risk factors. What risk factors do you see in this particular sale? And as an investor,
So for me, as I've said, the numbers are high. If you look at the peers in the same sector. So for me, my risk number one is what value is it going to add to me as a shareholder? So I've bought shares, so I have 5,000 shares. It's been trading, it's 10 shillings, it's 11 shillings. Am I going to get dividends at the end of the month? How much? You see, like the way you look at Safaricom. So Safaricom, the profit for last year until September was 52% increase. And we all know that it's going to be higher when they release the full year results. So risk number one is the value that it's going to actually present to me as an investor. Number two, will the numbers shrink? Will the share price drop to 2 shillings or to 4 shillings where we think that's the market cap? The estimated market cap is 154 billion, which is a bit too high. What is Kenya Pipeline Corporation going to do to be able to reach that particular billing? Are they going to upgrade the machines, upgrade the pipeline? We're looking at, so the financial year of 2024-2025 was very chaotic. A lot of us are looking at how this particular financial year is going to be and how the government is going to position KPC in terms of government policy, in terms of taxation, in terms of how they're going to partner with other countries to be able to do the pipeline to other countries. Because, I mean, its earnings are regulated by tariffs that are set by the government. So it's interesting. It's a strategic asset that has interesting valuation. It's a bit difficult to tell how the market will behave. Kenya is a unique frontier market. But the last risk for me is the lack of transparency and accountability, where we raise questions and shrugged off, where we raise questions and we don't get feedback, and the whole process is rushed. I was actually thinking that, the announcements were done in November, so we were actually thinking that between 14th of December and now, a lot will have happened, but it didn't until yesterday. So between yesterday and today, there's a lot that's happened. So for me, I think the element of risk can be determined and held by how transparent, accountable, and honest the process is going to be.
Let me add there. If we look at this case of Safaricom's IPO, it brought in close to 800,000 new CDS retail investors. Given that this KPC has a 20% allocation to retail investors, will you be able to achieve that number? Is also one of the risks, because we need more. We need to get that information out there. We also have close to, I think, 2 million dormant CDS accounts.
Yes.
So these are investors who already have a CDS account, but they are not active. So we need this information to be able to permeate to all the retail investors, so that they can take up or figure out if they want to invest.
Just to add something, you see, the element of risk doesn't necessarily just mean that it lies on KPC. The element of risk is actually defined by how the market will perceive this particular IPO and whether the conversations will push it up or down. And the thing that I've not seen, and I'm hoping that I'll be able to see, is how the other key stakeholders that are very important in IPO, the CDSC, corporate, NSE, CMA, coming together and being able to do roadshows and explain to people. And number two, the biggest risk actually from what you just said, government is hungry for money. So we've bought the shares. We're waiting to be given the allotment letters so that trading can start. If there's an oversubscription, and we assume that the 20% given to retail investors was actually over, will the government will the government be honest enough to return the money back to us, given that it's very hungry to pay for its management and debt? Or will this turn into become a thing of, let's wait for the next budget to be able to sort people? So the element of risk is hugely defined by them, how the entire environment is going to be, and how the key stakeholders are going to behave. I've not heard anything from CDSC, given that especially they have a lot of dormant retail accounts. I'm yet to see whether they've been able to upgrade their systems. Now we tout ourselves as one of the leading digital countries in the world. I'm also keen to see how CMA is going to now be able to regulate KPC. Once KPC starts trading on the stock market, it falls under the purview of the Capital Markets Authority. So the other aspect of, given KPC has a monopoly, how is CMA going to manage KPC? And also remember the political intonation on KPC. So how will CMA be able to manage this? Because if you look at Safaricom has CMA on one side, Safaricom has a CBK on the other side, who are able to manage it. And then you also have the Digital Association of Digital Lenders, who also have their own policies and things like that. And we've also seen Parliament has been very keen. So it's interesting to see how the whole country and the key stakeholders are going to create the right investment. But my biggest worry is for the retail investors. That's where my problem is. And the element of oversubscription and the element of refunds. Because Safaricom took a bit long to do the refunds. And you see, so those are for me, as an analyst, those are the interesting risks.
No, because even as you talk about Safaricom, we do have to mention Safaricom. Today, we saw Ndindi Nyoro arguing that the limiting of the transaction to a single strategic partner grossly undervalues the asset, that's Safaricom, and denies the state the benefits of competitive price discovery. And one of the things he also mentioned there is subjecting the deal to international competitive bidding would reveal the true market price and maximize returns to the consolidated fund. I want to really just understand, his sentiments. What do you feel about this, Biko?
So allow me to break it into a layman's understanding. The MP said that last year, Safaricom, the profit margin was 52%. And this year, from the numbers we've been seeing, the full year results for 2025 will be even better. So Safaricom is a golden goose. It lays a lot of eggs. So if you were looking to raise money for an emergency, for example, what the government is saying, stabilize government operations, ease of debt payments, then the best decision would be float the numbers to the public, float the numbers to international markets, let other players come in and see. So Vodacom is saying they want 15 per share. I'll come and say I want 17. The public, probably through public body policies, will say maybe I want to buy at 20 shillings. So I think, and this has been the bone of contention, the lack of transparency in the Safaricom process. Because a lot of people would have looked for money in every way possible to come and invest in Safaricom. Safaricom has single-handedly carried the stock market historical data for the last 10 years. From the time it listed, Safaricom has changed how it's the heartbeat of the economy. I mean, if you want to know how the economy is doing, just go to your local M-Pesa agent and ask them how much transactions they've done in a particular day. So Safaricom is our golden goose. And lack of transparency and just single sourcing one party to buy has been the biggest problem. To some analysts, they're saying the offer is good, because if they could have come to the public, maybe the value per share will have gone down, which is a point. But I'm also thinking the government should have listened to the views of the people and come back with a proper explanation as to how they picked this particular investor.
In addition to that, by the way, one of the key things also the Kiharu Member of Parliament, Ndindi Nyoro, is talking about is at least giving it 2 months, in his view, so that the country is able to get, or Kenyans are able to get a higher price. Is that even possible, Caleb?
I think the single sourcing is an issue, because as Biko has mentioned, this company is quite valuable. I mean, it traded at highs of 45 less than 5 years ago. So coming up with a valuation at 35 for a significant sale is it can rub a lot of people the wrong way. And then you're selling to a shareholder who will then become a majority shareholder of the company. So a lot can happen. It's a foreign entity and the like. So again, given the return of Safaricom shares last year, we did like 60% upside. If you apply that same to the current price of 30, you know you're already at 45. You're back to 45. If this sale was, let's say, if the return was the same and the sale was postponed to the end of the year, I think that's the point he was trying to make, that we could have gotten a better deal if maybe we went, multiple. We got a multiple bid on that.
But also, we were just discussing what value KPC will have to shareholders. Safaricom's value is actually very clear, and every year it brings more value for shareholders. So, and given its strategic aspect, remember during COVID, Safaricom was touted to be the only heartbeat moving around, and that should be a concern, because when you single source an investor who then ends up becoming the majority shareholder, who then ends up being able to define board appointments, key managerial appointments, key decision direction for the business, and given that it's the heartbeat of our financial institutions, our financial ecosystem, the over 3 million jobs that Safaricom has created, every person with a level head will actually raise the alarm. And we go back to the same thing, transparency and accountability. Why is the government so forceful? Why is the government so pushy? Why when the MP say that a period of 2 months, basically what it meant is explain to us why. Because the central bank governors say that the sale of Safaricom is going to be very important for this economy, to stabilize government operations. I mean, if Safaricom selling is this important to the economy, then, I mean, taking time to explain to us what the numbers mean and why you single-sourced one investor would not be so much to ask.
Just final remarks about today. And it's interesting that there are so many questions, especially around transparency, that would potentially, calm the hearts of Kenyans, investors like yourselves and myself, to come to terms with the decision of the government, perhaps even supporting the decision. But in your 30 seconds of your final remarks about the privatization of the Kenya Pipeline Company. I'll begin with you, Caleb.
All right. I think possibly just echoing, this is a good step by the government. I think it's a good opportunity. It's a good company for investors to be a part of. It's a stable business. You can predict its revenues. It has a very good competitive advantage. It has a sufficient moat around its business operations, its revenue streams, and the barriers to entry in terms of it being almost like a monopoly in the midstream market. So it's a strategic asset. It's an opportunity for investors to come in, participate in this IPO, or wait for the shares to start trading and see whether you'll buy in the secondary market.
Vico, let's hear from you.
It's a unique opportunity for us Kenyans to invest. It's a unique opportunity for the government to be able to see how critical government agencies can be managed with profitability, transparency, and accountability. But it's also an opportunity for Capital Markets Authority, CDS, and NSC to now see how they can be able to come together and do roadshows across the country and educate Kenyans on how they can be able to invest their money on the stock market other than leaving Kenyans to be scammed by other unregulated investment options.
Thank you so much, gentlemen, for making time. Biko Owafula, an investment research analyst. It was lovely to hear your thoughts. So insightful, by the way. And of course, also Caleb Mugendi, a portfolio manager at the Capital A Investment Bank. Thank you so much for sharing your thoughts. It's very important to understand when we talk about the IPO, the sale of 65% stake of the government of the Kenya Pipeline Company. What does that entail for the country? And of course, very great insights we've been able to gather. And I do believe that our viewers have been able to learn one or two things, if not more. Well, that has been the discussion tonight. The government formally kicking off the process to privatize the Kenya Pipeline Company through an initial public offering at the Nairobi Securities Exchange. A lot of questions and opposition has been coming against this particular decision by the government, and we've been trying to make sense of the numbers. Of course, my panel here talking about some numbers, they are not making sense as to how the government was able to arrive at the 9 shillings per share, and of course much more we've been able to discuss tonight. Thank you for joining us. As always, it's a pleasure to have you stay with us on throughout the entire night to the end of the bulletin. My name is Leangari, and my sign language interpreter earlier on was Meresha Owiti. As always, have a good night and God bless.